What's up, guys? Jordan from Precondo here. Today, I want to go through my predictions for 2022 because we are right around the corner. I want to talk about where the condo market currently is, and we are seeing rapid price acceleration into the end of the year, very reminiscent of December of 2019, which fueled into January and February before COVID really took the wind out of the condo sales. One of the strongest sellers markets we've seen in the condo market really since COVID has started here, and there's no inventory out there, guys. So if you've been following my videos for a while, you know that in December of last year and January of this year, I was saying that I believed the bottom of the condo market was in. I've been correct so far. Now, that's not to say I have a crystal ball or anything, but the indicators at the time and the price action, specifically months of inventory and price action, suggested to me that that was the turning point, and that has held true. But I still think we have a room to run. I think condos have a huge runway, and so I think they're going to out appreciate detached and freehold properties next year. So let's get into this. All right, so what are we seeing out there? We're going to start with just the broader condo market as a whole, and then we're going to head to some specific examples to show what I mean. And this is just the median sales price for a one-bedroom condo in the CO1 district, the downtown district of Toronto, from December of last year to December of this year. And you can kind of see, we were averaging a median sales price around $600K now, and we're in the high 600s, close to 700 today. So up about 100K, right? 20% increase from December of last year, which was, effectively the bottom of the condo market, the worst time to be a seller, the best time to be a buyer. And we're up to about, where we were pre-COVID. So we're above and beyond our pre-COVID highs in 99 out of 100 cases. So months of inventory being my favorite indicator, just a distillation. Are we in a seller's or buyer's market? I've put a red line here as to where the seller's and buyer's market is. So blue line is the average selling price for a condo in Toronto. And then the red dotted line there, or orange, whatever you want to call it, that is the months of inventory at that time in the market. So you can see here all the way, from 2016 forward, we've been in a seller's market, right? We haven't had a lot of condo inventory, and that's why you see price growth. And as you can tell, when months of inventory spikes, like at the beginning of COVID, you see price correct downwards. When month of inventory falls, you see price kind of surge and correct upwards a little bit. Right now, we are at 1.1 month of inventory in the condo market. On a weekly basis, we're actually below 1.1, but on the monthly, we're at a 1.1 month of inventory, which means, you have 1 month of inventory in the condo market. That's very little inventory, and that's going to fuel price growth. So as you can see here, we have recovered and then some from our pre-COVID peak, right? And I honestly think, guys, that is just the beginning. That's just the starting point. When you look at the detached market, which has obviously been incredibly hot all the way through COVID, versus condos, which took a real beating for the first year of COVID here, you'll notice that obviously, the orange line being the condo months of inventory, we stayed elevated. We stayed in a buyer's, or rather a balanced market for some time, while the detached market stayed in a seller's market. You can see here today now, though, we're, within a fraction of a month in terms of inventory of each other. So detached is just below 1 month of inventory. We are just above 1 month of inventory, no matter how you slice it. Both detached and both condos doing incredibly well right now. Like sellers markets across the board, very hot markets, most good listings selling well above asking price. And as far as the price difference between a detached and a condo in the 416 in Toronto specifically, we're still at $1 million gap, right? So we still have your average detached is now 1.8, your average condo is 750, 800K. So it's $1 million more expensive for a detached than a condo. And this is why I think there's so much room left to run, is because this is the most elevated we've been since 2016, 2017. And we all know what happened there. The idea that just everyone, because of COVID, is just indefinitely interested in every family out there, every professional couple just is going to go buy a $1.8 million detached is, of course, ridiculous. Very few households have the income to support that mortgage. So condos are the first rung on the property, ownership ladder. And that's just where people are going to go when they can't afford detached. And so now that COVID is ending, obviously you got Omicron and all this other stuff, and they're using that as an excuse to not hike rates. But as far as, people returning to the office, downtown being more vibrant, the idea that a detached in Whitby is almost the same price these days as a detached in Etobicoke is, of course, it's crazy. Everyone's going to spend their Saturdays and Sunday nights at Kelsey's patio. Like, obviously, if you're starting a family, Whitby's great, but if you're not, Whitby's not so great, right? There's pros and cons to suburbia, and I think you've seen such a strong 2 years of growth in these outside, outskirts markets, that it just makes the Toronto condo look like such a good deal comparatively, which is a great segue into this chart. I've shared it before, but when you look at the downtown Toronto condos over the last 2 years, we're up 11.8% versus areas like Barrie's up 60%, Brantford's up 64%, Hamilton 50%, Waterloo 55%, London 60%. You get the idea. From a macro picture, and I'm not a big macro guy, but if you watch my videos, I love to talk about how we're underbuilding homes. Blue line here is how many new households we have in Canada, and the bars are how many households we've created in various segments. So basically, how many houses have we built and how many houses did we need? And what you'll notice is, with the exception of 1 year, we are consistently underbuilding in Canada. And 1 or 2 years of immigration not hitting targets is not going to change the picture of, over the span of the last 10 years, we've probably underbuilt 500,000 homes. So the idea that, 1 or 2 years of low immigration, that's not going to solve this issue. We have a much larger housing deficit than that. And naturally, immigration currently looks like we're going to hit our target of 400,000 this year. So incredibly bullish for the housing segment. And final point on the macro, obviously the rate hike, or rather the rate decision, remains unchanged. They haven't hiked rates despite the markets, pressuring them to, using Omicron and other, economic recoveries as excuses to do so. Now they're saying, I believe mid quarters of next year. So I guess, second quarter, third quarter is when that's the guidance they're providing as far as when they're going to hike rates. I think you'll probably find that, Steve Saretsky just made a great video on this. I would go watch it, but I think you'll probably find that they will continue to try to find excuses not to raise rates. The idea that we're going to get 6 or 8 rate hikes next year, to me, is insane. I think more likely 2 or 3 rate hikes. But, them leaving the rate where it is kind of just goes to show they don't want to act prematurely and just have to cut rates. So I think I think 2 or 3 rate hikes next year is a safe bet. Do I think that'll cool the market? Absolutely. You're not going to see another 60% over the next 2 years. That would be ridiculous to expect. But I think that certain asset classes, condos downtown specifically, are, now that they're the most affordable segment, are going to do really, really well despite 1 or 2 or 3 rate hikes. All right, so now getting down to some specific units here. So we've got one here at Condos 1080 Bay. This building shows up a lot in my videos because it is one I actively track. It is one that I look at a lot as a sort of an indicator for downtown as a whole, or the downtown core as a whole. This one is a 1 and den, 611 square feet. Pulled the floor plan here. Great floor plan, 1 bathroom. This one comes with parking, but it's sold for 1.03. So over $1 million for a 1 and den, working out to $1,700 a square foot, just shy of $1,700 anyways. And to give you perspective on where this unit has been price-wise, we got the 23rd floor selling back in July of this year for $970. And then you got the 17th floor selling back in January for $872. And then pre-COVID, we've got the 12th floor selling in August of 2019 for $868,000. So considerable price growth through COVID. Moving on to the next example, we got something on the west end here. This is Picnic Condos, 731 square foot, 2 bed, 2 bath, 1 parking. This one was asking $798, and it sold for $975,000. And this is what you get in these end user sort of boutique mid-rise buildings that don't have a lot of listing inventory. Like I said, like inventory in the condo market is incredibly thin right now, specifically at those end user dominated buildings. In those high-rise, high-density buildings where you have more investors, you'll see a little bit more listing volume, still considerably less than we were seeing just a year ago. But yeah, some of these buildings are really setting records right now, specifically in the past few weeks, just because there's nothing available. Now this unit, 731 square feet. This is what it looks like here. Great split layout. Sold for $975. So, over $1,300 a square foot. And this one is just 1 unit inside from the unit that faces Bloor. Obviously, the Bloor facing units in this building are most desirable because they overlook High Park. But what's interesting about this building is you go back to just a couple of months ago. So this one sold for $975. You could have got the 930 square foot 2-bedroom split layout that actually overlooks High Park for $920,000. So this one's 200 square feet more. You could have got it for $50K less just a couple of months ago. And this is what happens when you have no inventory in the condo market. It's obviously a more premium unit, larger unit by 200 square feet, sold for less in just a couple of months' time. And this is a tweet from my buddy Vasil about just the inventory shortage here. Now, go follow him on Twitter. He's got some great takes. Now, he said something recently about, tweeted something about the East End of Toronto being way nicer than the West End, which is, of course, I mean, I'm a West Ender myself, so like, you know, not only is it objectively false, you know, patently false, he does have some, you know, good real estate takes. Anyways, he posted this screenshot from Mazer. I believe this was from Red Flag Deals. Anyways, Riviera, Water Club. Anyways, across these 4 buildings, the point of this story here, across these 4 buildings, 1,700 units combined. 0 currently listed for sale, 0 turnover. And again, just goes to show, you know, these end user dominated buildings, you're just not seeing any inventory. It's incredibly hard to be a condo buyer right now because there's just nothing listed. Anything nice that is listed sells in multiples, right? Final example here, all the way out in Square One, Crystal Condos. So Crystal's right out here, Ontario, and Eglinton is a Pinnacle building, 637 square feet, was listed for $590. Sold for $653,000, right? Putting it over $1,000 a square foot. 1 in den with parking in Square One, over $1,000 a square. So in Square One, a 1 in den these days with parking is going to run you $650K. These are not prices we're used to seeing in Square One. And again, it's just a product of no inventory on the market. It's a great, you know, it's a great Pinnacle layout. You've got the, I mean, just flawless layouts by Pinnacle. They knock these guys out of the park. U-shaped kitchen, full-size appliances, all that good stuff. While every other builder's building smaller and smaller, Pinnacle keeps building these large livable units with these U-shaped kitchens and full-size appliances. Very commendable. One of the things I admire about them. But on that note, pre-construction is moving incredibly well right now, especially remaining inventory, because the prices at new launches these days are very, very high because of the cost inflation. You know, the developers have to price accordingly so that they don't have to cancel their projects. So, you know, when the cost of building a high rise is up 20%, naturally, the price of pre-construction is going to follow that. Now, if you are looking for a pre-construction project in Mississauga and Square One, I actually really recommend Gemma. And you can go to precondo.ca/Gemma. I will send you the pricing and floor plans. These guys just launched, and the prices are really, really attractive. So you can get a unit like this, 615 square feet, 1 in den, you know, your U-shaped kitchen, perfect size den, perfect layout, no wasted space here. You can get this, and if you notice, it's right beside Crystal, right? So it's like the newer, better version of Crystal, right on the here Ontario LRT. You can get this unit pre-construction from Pinnacle for the high 600s, about $1,100 a square foot, which includes parking and locker, which to me is crazy because the other pre-construction options in Square One right now, for one beds and 1 in dens, you're looking minimum $1,250 a foot, and that does not include parking. So these guys are coming in $150 a foot lower than the comps. They're the pre-construction comps, and they're throwing in parking and locker. I mean, just one of the reasons I love Pinnacle. They continue to deliver great prices and great locations. So if you want info on that, go to precondo.ca/Gemma, and I'll send you all the pricing and plans. And if you want to talk to me about pre-construction, real estate investing, any of that good stuff, book a call with me, precondo.ca/call, and I will see you guys next video.